right. We'll get you more on that from the startup Mahakumbh. But with that, let's get started with our show, Buy Now Sell Now, where we take your queries and get them answered by the experts. And you can start writing in your questions on the number that's flashing on top of your screen. Please write your buying price for the stock and the holding period and your question, and we'll get them answered by our guests. In fact, it's a techie special today, so we have Kunal Bothra and we also have Foram M.Chheda joining us. Good afternoon, good morning to both of you. Thank you so much for joining us today. But let's get started with all the questions then. The first question is coming from Somashekhar, who's from Bangalore. Wants to know whether Cipla and Dr. Reddy are good counters to buy at current levels now, given the tariff exemption coming in. But on the charts, he wants to know whether Cipla and Dr. Reddy look good. I'll come to you, Forum, first. Tell us.
Well, hi, good morning, and thank you for having me on the show. Well, to begin with, first in on Dr. Reddy's. Dr. Reddy's, since it's Friday also and a weekly closing seems to be a little on the negative side, we should just wait for even a weekly closing. Any closing above 1,100 would trigger that there is going to be some kind of a stability in this particular stock. However, it's too soon to say to consider it a buy. I think one should just wait and watch for some stability in Dr. Reddy's. And as far as Cipla is concerned, it's a very similar thing, very similar chart to what we have in Dr. Reddy's. Very strong support levels at 1,390. But since it's a Friday and a weekly closing would matter, it's important for us to see some stability in the stock price between 1,390 and 1,400 on a weekly closing basis. Then one can consider looking at buying the stock from an investment perspective.
Okay, thanks for that view, Forum. Kunal, coming to you, our next query is coming in from our viewer Perumal, and the stock in question is Gail. He holds 100 shares of Gail at a buy price of 244.6 rupees per share. He's asking if now he should hold or average or sell. These days, hold or average or sell? This is a query that we're seeing across the board, given how choppy the markets have been. We've seen a recovery, and once again, on the back of this tariff tirade, the markets have become choppy again. Kunal, what's your take on Gail right now?
Yeah, very good morning. So I believe, this is the phase of the markets we are into. So not a surprise that viewers are asking about such kind of a stance. But I think what you've done is Gail is a classic stock. It's a strong name, and we've seen the pedigree of the price movement over the last 3 to 4 years for Gail. So I believe on the back of this and on the back of the recent correction, you could look at an opportunity where the stock may generate for you to average further. My sense is that the stock should come back towards its 50-day moving average. That lands up closer to 170 odd mark for Gail. I believe closer to that level is very close to average.
All right, moving on then. I'll come to you, Forum then. This is Satyan who's writing in, wants to know between GE Shipping and DLF, which is a better pick and the right time to buy this stock.
GE Shipping
and DLF from real estate.
I'm sorry, your voice cracked.
GE Shipping or DLF, which is a better pick, and what is the right price to get in?
Well, I think GE Shipping is showing some kind of a base formation and one should watch out for it. I wouldn't say that one should just jump in and buy at these levels. However, the stock price had formed a bottom at closer to 800 levels in the month of March or end of Feb. And since then, we have seen a consistent or a gradual up move in the stock. I would suggest that one can watch out for GE Shipping, but at a lower level, closer to almost 889, where a small accumulation can be considered. And even a strategy should be followed where one can look at buying in tranches. So if at 889 to 890 levels, and then further look down for a level of closer to almost 867 to 865, where one can consider adding in more. Decent accumulation seen in the volume, so the stock is good for long term.
Good for long term is the take coming in on GE Shipping. Let's move on. And Kunal, next query coming in from our viewer Satya Veni from Hyderabad. They're a long-term investor. Stock in question is BEL and PFC. So two stocks. They hold BEL at a buy price of 319 and 2050 is the quantity for BEL, and 600 shares of PFC at 551. They're asking if they should just book out their entire position or average, and if so, at what price? What's the guidance going ahead?
So first of all, both of these stocks are classic. I think BEL as well as Power Finance, I think both of these stocks have done reasonably well. This is a phase of a correction for many of the PSU stocks, but I believe that both of these stocks are quality names, and we've seen that BEL, for example, that's a stock which has been a leader stock in the last 2-3 months of this rally for the defense names, and how the stock has recovered from those 250-60 levels to, I think, at a point where the stock was at 300 plus mark very recently. So which means that the stock will find its mojo back again. I believe that makes a lot of sense to hold on to both of these names, Power Finance as well as BEL. Now the question is that at what price point can you look to average? My sense is that maybe another 5% odd correction from current price points for both of these names, say closer to 265, 270 thereabouts for BEL, as well as maybe closer to 390 or 385 for Power Finance. They could be classic zones if in case the stock happens to correct to those kind of territories for you to average or accumulate further.
All right, moving on from there to coming to your forum. This one's coming on Bank of Maharashtra. Karan Gupta wants to know the prospects for Bank of Maharashtra for the next 12 months. And this one has seen fair bit of correction, over the last 1 year. In fact, PSU banks, all the financials have seen fair bit of correction. So from here on a fundamental level, banks are a common consensus. But on the technicals, how do you see Bank of Maharashtra?
Well, as you rightly made a mention that it has seen quite a lot of correction overall if you look at the PSU banks. Now, particularly this stock, the stock price has corrected nearly 36 odd percent from the highs of closer to 73, which was formed in last year in June. Since then, the stock price has been in a kind of correction. Now, since this year, we have seen the stock price has been stabilizing and showing a base formation near 45 levels. However, even an indicator like RSI is very much neutral, is not indicating a buy. But at the same time, one can, if somebody is holding, like a holding is there, one can consider holding. But for a fresh entry level, it's not advisable at these levels. Let it give a weekly closing above 48 levels where we can see some momentum, some accumulation as well, which would trigger a buy. At the moment, it's very much into a consolidation.
Okay, so that's the take. If you hold Maharashtra, Bank of Maharashtra, continue holding. Otherwise, would not suggest a fresh buy at this moment. That's the take coming in. Let's move on. And Kunal, coming to you, stock in question is TCS. Our viewer, Professor Shiv Kumar, is writing to us from Bangalore. He's asking if we can buy TCS at this price for a long-term holding period of 2+ years. Is now an attractive entry point for TCS?
See, I'm sure you're keeping an eye on what's happening across the globe and especially the US market. So I think on the back of it, you are bound to be going into a very strong and an uncertain phase for the IT sector going forward. So my sense is that maybe over the next 2 or 3 months, you could probably get much more better levels for buying a stock like TCS. But I think what you can actually start off is that to buy in stages or buy in tranches. So you can buy at current levels, maybe 1/4, 1/3 of your expected quantity at current levels. Wait out for price zones where the stock corrects, say, by another 5% to 7%. And if the news flow starts to be a little bit more better than what it is right now, that's where I would believe that you should look to average further for a stock like TCS.
All right, that's the take coming in on TCS. But moving on from there, this is Venkat Rao who's writing from Visakhapatnam. He says he's a senior citizen and is a long-term investor, and he holds IRFC 900 shares at a buying price of 178 rupees and BHEL 1300 shares at a buying price of 304 rupees. So he's sitting at a huge loss on both of them. How can he average this? Forum, I'll come to you. A tricky question there. How can he average it, or what's your call basically on these two counters?
Well, as you rightly made a mention, the levels are very high of entry. However, considering in particular first is IRFC. IRFC is currently now showing signs of consolidation, but it was clearly in a downtrend. We did see last year that the sector entirely performed, and along with that even was IRFC. However, now from the past, I think I would say really 9 months or so, we have seen the stock price in a clear decline from 220 to closer to almost a level of 112. Now the stock price is showing some signs of stability, but not indicating a buy, or one should look at averaging it because there are hardly any volumes. So it's not indicating any buying or any momentum that is picking up or any bullishness at the moment. So I would suggest for IRFC to consider holding on to it. But for averaging, one can look out closely for the volumes, that there should be an increase in volume, and only above 133 would trigger some kind of a bullish momentum. And as far as BHEL is concerned, I think BHEL is far better than IRFC at the moment, where since this year, beginning of 2025, the stock price was consolidating in a range of 175 to closer to 220. And even when today the markets have been little uncertain, and we can see BHEL is outperforming as well. Thus, one can look at averaging this stuff and continue to hold on to it. Even a fresh buy can be considered at these levels.
Coming in for IRFC and BHEL both. Let's move on from both of those stocks. And Kunal, coming to you, stock in question is IOC. Our viewer Siva is writing to us from Chennai. They've recently entered IOC 10,000 shares at a price of 133 rupees, hoping for a 5% swing upside in a very short term due to price volume action is what he is spotting when it comes to this stock. He's asking for your view on targets to expect, and he's asking if he can hold for 2 months. Do you believe a 5% swing amid a market like this in 2 months is realistic to expect?
Yeah, it's realistic to expect, and especially I think with the fact that stocks like IOC, they are very low to moderate beta, so the movement into these stocks is more trending in nature rather than more volatile. But my only concern with IOC is that the stock has not yet confirmed a breakout, and that breakout point for IOC is around the 134.5 mark, or say 135 to round it off. Even the indicators, when I'm looking at on the daily charts for IOC, are now coming back into a zone of neutrality, which means that you might expect that the stock may stagnate over here for a few more days before it tries to pick up pace. The breakout point which you need to watch out for is 135. That would complete a swing breakout and inverted head and shoulder pattern breakout for IOC. About those levels is what I would believe that the stock can be good for a decent rally. So you can hold on to the positions as of now. The stock seems to be going into a zone of consolidation, but 135 plus is a breakout point which you need to watch.
All right, moving on then. Foram, coming to you. This is Soumya's writing from Chennai. She's bought REC at 540 rupees. Wants to know whether she should continue to hold or average or exit at these current levels. What is the target expected for a short to medium term holding period?
Well, the stock price has seen a steep down move since last August, like from 640 to nearly 360 levels. However, since the end of Feb or beginning of March, we have seen majority of the prices or the stocks have started improving, and so has this. Currently, we can see a very gradual up move, but is not indicating that we can expect a very big upward momentum in the near term. However, from an intermediate perspective, continue to hold on to it. There is a short-term resistance, or I would say like a breakout, which can take place is above 440 levels, which can trigger some upside momentum towards the levels of 516 if the markets are favorable enough. But at the moment, it's purely a hold, but not expecting any bullish momentum in the near term, but more of consolidation.
Okay, well, that's the take coming in on REC, expecting some consolidation on the charts. Kunal, our viewer, this viewer that we're talking about, she has also asked about GNFC, is the stock in question. She holds GNFC and she has bought it at a price of 670 rupees per share. Same question, should she continue to hold or average at current levels, and what are some targets that you are spotting in the medium term for GNFC?
See, if I put this into the basket of fertilizer stocks, then GNFC is not something which has done reasonably well. In fact, at a time when other names like Coromandel, you've seen Chambal Fertilizers, they've run reasonably well for themselves. Comparatively, this stock has underperformed. So the question over here is that, do you want to stay with an underperforming stock even at a point when the stock has been struggling in the best as well as in the worst of the market stance? So I think if you ask me, I would probably advise that shift out to some other names in the entire fertilizer pack. I would suggest something like Chambal Fertilizers. If the stock corrects, say close to that 600 mark, that could be a good territory where you can look to accumulate or add. And my expectation is that once the move resumes on the upside for many of these fertilizer names, you'll probably expect Chambal Fertilizers to do exceptionally well going forward.
All right, with that, it's time for a quick breather. Don't go anywhere after the break. We're coming back and taking all your queries and getting them answered. So stay tuned. Welcome back. You're tuned into Buy Now Sell Now, where we are taking all your queries and getting them answered by experts. And you can start writing your queries that's on the number that's flashing on top of your screen. Let's get going yet again. Then coming to you, Kunal, this query is coming from Sunny from Mumbai. He wants to know, he holds 1,000 shares of Dabur and he wants to switch to Hindustan Unilever. Really, Kunal, is this a good bet? Because fundamentally, just yesterday Dabur came out with these operational updates, and the fact that the outlook for FMCG companies, the volume outlook is rather subdued as of now. What would you say about the switch from Dabur to HUL?
Well, it may be a decent bet over the short term, but it's a little bit too early to say that, because HUL is not something which has recovered very smartly, and doesn't look like, because the volume setup for HUL is still a bit more awry. It indicates that maybe the stock could come back into just about a swing uptrend of 3 to 5% if the entire FMCG stocks would probably come back into a recovery mode. But I think in that aspect, you might probably expect a much more sharper recovery, which could happen even for a stock like Dabur because of the way the stock has been sold off. So it's a bit difficult to try and predict this over the short term. Maybe I think we need to watch out for a point where HUL breaks past about 2350 mark. That I believe could be a litmus breakout point for HUL, and that would determine that maybe the stock would start to get back into a zone of outperformance.
Okay, so that's the take coming in on HUL. Let's move on. And Forum, coming to you, our viewer, Mr. Venu, who's a senior citizen from Chennai, is writing to us, and he holds 50 shares of Polycab. His buy price was 6,100. He's saying he's facing a huge loss, no doubt, on this holding. He's asking, is there any chance of the stock even crossing his buy price? Is there any chance of him even breaking even on this stock, forget making a profit? And what are the levels that you are spotting when it comes to Polycab?
We have seen that this industry, some of the stocks like Havells, Polycab, KI Industries have seen a very steep down move. But that's considering that aspect, after that fall also, we have just seen the stock price consolidating or taking a breather from falling. So according to me, it's going to take a while. Maybe really a long time for the stock price to recover because if we talk about technically speaking, there has been a very important resistance at these levels of 5,400 in the near term. Even if it has to take off, there is a very important resistance level at 5,700. So I think it may get capped there. So, but it's difficult, but there are no volumes. So it is not even suggesting at the moment that there is any kind of buying that is happening. However, he should just continue to hold on to it. But any kind of levels closer to around 5,600 can be considered to switch from the stock.
All right, moving on then. Coming to you, Kunal, then. This question is by Kuldeep Singh Marwa. He's writing from Mumbai. He says that the market has become very dicey and scary at this point. Of course, needless to say that. He wants your advice, besides other stocks that have fallen. He holds 17 shares of Siemens at a buying price of 7,900 rupees, and he holds 25 shares of Maruti at a buying price of 13,000 and 30 shares of Reliance. What should be done about these stocks, Kunal?
So Siemens, Maruti and Reliance.
Yes.
Okay, I think all three of them are of course brilliant names on the long-term charts, and we've seen the pedigree of the stocks to try and last strong periods of major volatility. Yeah, in this phase of the markets, you've seen Reliance underperform, Siemens being one of the strong underperformers with respect to the entire capital goods space, and so is the case with Maruti, which has been an underperformer even in the previous legs of the price uptrend for the auto stocks. But then with these large cap names, there are bound to be points where these stocks may underperform. But when you look at this from a long term basis, these stocks are the ones which provide consistent returns on the long term basis. All you need to do is just about try and identify zones where you can average out these stocks, and especially at points where these stocks come back into long-term support territories. For example, for Reliance Industries, that could be say closer to 1100 mark or 1050 levels if in case the stock happens to reach to those kind of points. For Maruti, for example, that zone could be sub the 11,000 mark on the short to medium term charts if in case the stock happens to correct to those kind of territories, and another 3 to 5% correction for Siemens. So I think it's better to try and hold on to these names from long term play, but then try and identify zones where these stocks can come back into strong support territories for you to average further.
Okay, that's the take coming in on all three of those stocks. And Forum, coming to you. Next query is coming in from our viewer, Mr. Rohan, who's writing to us from Pune. And he has purchased 400 shares of Adani Power. That's the stock in question, Adani Power, at 623 rupees per share. He wishes to hold this for the long term. Should he continue to hold, or should he just sell off his holding? 623 is his buy price. Stock is at 531 thereabouts right now. What's your take on this one?
Adani Power had formed a bottom in November at a level of closer to 430, and since then the stock price has been moving in a very wide range. So on the lower side, we can consider 430 to 450, and on the upside, it's close to almost 580 levels. Now, if we look into from a longer term perspective, it's just merely consolidating, so there is no harm in holding this particular stock. when to expect a momentum is when the stock price is giving a good strong weekly closing above 560 to 580 levels. Then we can expect some kind of a bullish momentum towards a little higher level of closer to almost 670, but that's from a longer term perspective. Volumes accumulation is there on a very generalized basis, that there is no concerns as such that there is no volume. So one can continue to hold on to it from a longer term perspective. No need to exit.
All right, moving on from Adani part, coming to you, Kunal, this is K. Venugopal Reddy, who's writing from Hyderabad, wants to know whether he should hold, average, or sell Bata at current price. He has bought 9 shares and he's bought it at a price of 1600, so he's already sitting at a loss. And in the last 1 year also, Kunal, Bata has been in a corrective phase. So from here on, are the tides going to change for Bata, or is it a sell?
I think it's better to try and exit the stock. Now it's difficult to exit the stock at current levels because it's already at a multi-year low, for Bata. But then, there were phases where the stock, went into a 10-15% rally. Just like I think 2 months back, if I'm not wrong, when the stock came out of FNO, that was just around the 1400 mark or 1450 levels thereabout. So I think that was a point where, the stock came back into a rally mode. So try and wait out for those zones where the stock comes into a zone of a rally, retests its long-term moving averages, and that's a point where you can look to exit.
Okay, so that's the take coming in on Bata India. Forum, coming to you. Next query coming in from our viewer, Mr. Venkat, who's writing to us from Chennai. He's holding Amara Raja Energy. 30 shares is his holding. His buy price is 634 rupees per share. So Amara Raja is the stock in question. He's asking if you could confirm whether he can accumulate further or if he should just book profits, because 630 for buy price. Stock is at 985 right now. So he's made quite a good profit on his holding. He's happy to hold the stock for 5+ years. Do you think the stock is good enough to be kept in the portfolio for 5+ years, and should he continue to hold?
Well, actually, he's got a good entry level, so that's a good thing. And even right now, in spite of when the stock price had moved more than 1700, and now from there we've seen a correction. So, and still holding in a profit, that's a very good thing. So for 5 years, he can continue to hold on to the stock. Now, if you look onto a weekly chart, that it's comfortably trading above the 200-week moving average, so that's a good sign. However, I would just suggest to be a little cautious and careful. If the stock price has to break on a weekly closing basis below the levels of around 920, he can consider booking profits. But for now, it's clearly hold, even if it's for 5 years. But I'm just saying to be on a safer side, that he can to just be a little cautious and be on a conservative manner to book your profits if it breaks 920. Otherwise, continue to hold on.
All right, moving on then, coming to you, Kunal. This is Swati writing. She's a long-term investor. She wants your advice on good stocks from Subbastian Chemicals, NBCC, and Avanti Feed. Which one should she pick?
So I'll go for Sudarshan as well as NBCC. I think Sudarshan Chemicals so far, I think, is forming a very classical kind of a pattern. It's a bullish flag formation on the daily charts. The stock has also neared a breakout of its 200-day moving average. So looks to be relatively very strong as compared to the other peers, and seems to be that the stock has recovered from maybe one of the worst part of its recent corrections. So the near-term prospects could look a lot more attractive. Even for NBCC, I would probably expect that the stock would have formed a near-term base for itself. We've seen a good price volume consolidation for NBCC. The stock is nearing its 50 DMA breakout. So near-term wise, I would probably expect the stock to come into the zone of 90 to 95 for NBCC.
The take coming in on Sudarshan Chemicals and a couple of the other stocks. But let's move on, and Forum, coming to you, our viewer Mr. Hari Prasad Reddy is writing to us from Hyderabad. He's bought 450 shares of Tata Chemicals 2 years ago at 960 rupees per share. He's saying now should he sell this entire holding, because he's at a slight bit of a loss right now, and he's asking if he should shift this holding to Nestle, ITC or Tata Motors. Would you A, recommend moving out, and B, if yes, out of Nestle, ITC and Tata Motors, which one would you recommend?
Well, I would suggest him to continue to stick to Tata Chemicals itself. Now, I think currently he would be in a loss of on an average of closer to around 12 to 13% from his buy price. Currently, the stock is weak. However, the sector is basically showing some signs of now turning around, and hence one should patiently wait. So according to me, it's clearly a hold. It may take some time because it's a very early signs of what we are seeing turning around in the sector. And thus, I would suggest you to hold on patiently. Otherwise, Nestle is also good, but switching at these levels would not be appropriate for Tata Chemicals, although Nestle is currently looking good as well. So I would suggest continue to hold on to it. The stock price can come down to almost 800 levels, which is a support level. However, as we progress with the markets being very favorable, we can see some kind of an improvement in this particular stock. And again, the stock price is likely to reach to an average price of closer to 950.
All right, moving on then. Kunal, this is Anu writing from Gurgaon. She says she's a big fan of yours and she holds 500 shares of Coal India at a buying price of 398 rupees. Wants to know your short-term view for Coal India.
So thank you so much for that. See, on Coal India, again a stock which had done reasonably well. In the last 3 or 4 months, the stock had corrected more than 30%, if I'm not wrong, from 500 plus levels to 350 thereabouts, which was the recent low for Coal India. Now the stock is establishing a range for itself, so which means I sense that 350 to 400, 410 could be a near-term range for Coal India. Since you bought at levels of 390 thereabouts, I believe that there could be a slight bit more room on the upside, say closer to 400 levels, where you can look to book profits on the stock. But then buying at the midpoint of this 50-point range for Coal India, say closer to 375, or at the lower end of the range, could be a better strategy if you're looking at it as purely a short-term play.
Okay, so that's a take on Coal India and the strategy that you should be playing when it comes to this stock. Forum, coming to you. Next query coming in from our viewer, Mr. Vijayan. He's asking if now is the right time to make a fresh entry into HCL Tech. What do you think about this company?
Well, we have actually seen the entire sector being under pressure, and at this point of time, I would suggest to avoid the stock and let the sector overall stabilize. Now, particularly HCL Tech has fallen down quite a lot from its highs of 1979, which was marked in the beginning of January, and since then there has been a very steep decline coming in. According to me, wait patiently, wait for it to stabilize. And I'm in fact watching out for a lower level of closer to 1360 to around 1400 levels, where the stock price should stabilize. But if there is no buying happening, then it wouldn't make sense to get into this particular stock, which may underperform. So patiently wait, watch out for stability towards 1400 levels, and any increase in volume could indicate a trading call. But from a longer term perspective, it is yet not indicating a buy.
All right, that's the view coming in on HCL Tech. But coming to you, Kunal, this is Deepak Saha, who's writing from Kolkata, wants to know your view on KPIT. He's bought 200 shares at a buying price of 1,270 rupees. What should he do now?
Just hold on to it as of now. Maybe there could be a case where the stock may come back closer to your cost price. I think the range what KPIT Tech is establishing is 1100, 1150 as a support, and then 1300, 1325 as a near-term resistance, which is also coinciding with the 50-day moving average for KPIT Tech. So my sense is that the moment the stock gets into a phase of a bounce, if it comes closer to your cost price or slightly above those levels, you should consider looking out to book profits.
Okay, so that's a take on KPIT Tech. Forum, next stock in question is GMR Airports Infra. Our viewer, Mr. Subramanian, is writing to us from Chennai, and he's saying that his investment in GMR Infra is okay, he's bought 100 shares at an average price of 86.6. So that's his investment when it comes to GMR Airports. He's asking, do you think this will give a return in the next 1 to 2 years? It's a slightly, tricky query to be asking, but what's the next levels that you are spotting? His buy price is 86, stock is at about 82 right now. Do you think this could give a decent return? Now, decent is an ambiguous term, but what in your view could the return be in the next 1 to 2 years?
Well, yes, it is definitely tricky. Now, one is the stock price did see a good up move yesterday, and even today it went up a little higher than yesterday, but it's kind of achieved its target closer to a 200-day moving average, which is also a resistance at around 84 levels, and it formed a high of 84. So possibly for the near term, it's facing some resistance, and the stock price can retrace back to the levels of around almost 80 to nearly 79, which was ideally a breakout level from, I would say, an inverted head and shoulder. Now, from a longer term perspective, considering 1 year, I'm expecting the stock price might move towards the levels of around 89, not beyond that, because there's a very strong resistance at those levels. And currently, there are not too much of volumes. Until unless we do not see volumes, I'm not expecting a big up move towards 100. But at least 89 could be on the cards, considering if we see some increase in volumes.
All right, moving on then. This is Meghna writing from Mumbai. Wants to know Kunal's view on the metal sector for the medium term, since all the metal stocks are down due to Trump's tariff threat. Of course, metal stocks are down almost 6% today, and on the back of the demand concerns, global demand, and of course also the slowdown in the business activity that we're expecting, all the metal stocks are taking a tumble. Kunal, on the charts, what do you see?
Yeah, I've been very bullish on Tata Steel as well as JSW Steel, and over the last 2 or 3 months, these stocks have delivered fantastic returns. Now, after this kind of a correction and the sudden move on the downside for the metal counters, I think it indicates that maybe we could be in for a zone of moderation for these metal stocks, which means that over the near term, you might see that these stocks may drag a bit more lower from current levels. So I would suggest to wait out for a fresh entry on metal counters as of now. Maybe another 5% to 7% correction in the near term. That could be a point where you may consider looking to buy this if you're looking at it as a pure short-term play.
Okay, so that's the take coming in on Tata Steel, Kunal's preferred pick amongst the entire metal basket. Let's move on from that. And Forum, next query coming in from our viewer, Mr. Gopal. He's writing to us from Warangal, and he's asking if there is any further downfall that you are expecting to see in RVNL and Tata Motors. He's asking, would his strategy to average these shares at the current price benefit him or not? So RVNL and Tata Motors, well, Tata Motors is a stock that's beaten down in today's trade as well and has seen significant correction from the top. So what's your view coming in on both RVNL and Tata Motors?
Well, we'll start off with Tata Motors first. That one is the Tata Motors is very, very close to the support level of almost 600 levels. Now, that is more like a psychological marks, being a round number, that 600 would act as a support level from a near-term basis. And indicator like RSI is also very close to the oversold territory. But if we see a breakdown from these 600 levels, the stock price can go a little lower towards 530. So considering that, I think one needs to wait for some more confirmation to consider even averaging the stock or to look at buying the stock. Yes, but if he has it for a long term, then definitely it would be a hold at these levels. As far as RVNL is concerned, that RVNL also has seen a significant decline from its highs of around 640, which was marked in the month of July last year. Since then, the stock price has been correcting, and right now also it is very early to say, but it's showing some signs of stability. It is also holding up above the 100-week moving average as well and showing some strong support there. However, it is yet into consolidation, and now I feel this stock price is stabilized compared to even Tata Motors at this point of time, that RVNL is now more stable compared to Tata Motors. So both are hold from a longer term perspective, but for averaging Tata Motors, one should watch out for lower levels.
All right, moving on then, Kunal, coming to you. This one, they haven't written their name. They want to know about Jio Finance. They hold 900 shares at a buying price of 334 rupees per share. Want to know if they should be holding it or selling it. I mean, just today we have this news for Jio Finance of that capital infusion forming a JV, with BlackRock and in investment that they're making in the business. But this fund has been correcting over the last 1 year, fair bit of correction on Jio Financials. What is your view on this going ahead?
Yeah, almost like a 30 to 40% correction for Jio Finance in the last 4 to 5 months, from 380 levels thereabouts to now 220. I think the recent low was around the sub 200 mark. But then I think this also indicates that the stock is not one of the strongest stock in the entire pack. However, I think the only good part when I look at the charts for Jio Finance is that this 2-month-old downward sloping trend line, which started off from 350 levels for Jio Finance to sub 200, that trend line has been broken, which means that there could be a case that the stock may come into a bounce back mode, but that could just about be a short-term rally for a stock like Jio Finance. If you're looking to park money into the entire NBFC pocket, there are far better names which have higher pedigree, as well as the recent charts have been a lot more stronger. I believe that looking at those charts could be a better prospect, but as of now, hold Jio Finance, just play out this bounce on the short-term basis and then look to reassess.
the take coming in on Geo Financial. And Kunal, in fact, next query is also coming for you only. The viewer is holding L&T. His name is Krish, who's writing to us from Chennai. He holds L&T 100 shares at an average cost price of 3,600. He's asking if he should continue to hold this or sell and look for some other Nifty 50 stock. He's looking to hold a Nifty stock only. So should he continue to hold L&T, or do you have another Nifty 50 pick that could be better for him in terms of his portfolio?
No, so I think holding L&T could be a good strategy. 3,600 is not also a very steep price when you've bought L&T. Maybe I would suggest that if you have some powder dry, so you can probably look to accumulate further at lower levels. Say if the stock happens to retest the previous close, which I think is around the 3,100 mark, thereabouts for the stock with the near term, that could probably be a point where you will look to start averaging out further.
All right. Well, that was the last stock query for the session. Thank you so much, Foram and Kunal, for joining us today. We are completely timed out on this edition of Buy Now Sell Now. But thank you so much for taking the time out. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere because market action continues on ET Now.
If you like this video, then like, share and subscribe to ET Now.